Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning as usual on May 2nd. Okay, so about a month ago, we had the crescendo of selling with all sorts of very extreme, panic selling type readings, very negative sentiment. Then we had the tariff delay and the initial pop, and we said, the market probably has a low that it can work off of, and it has. The question was, how would the bounce be? Would we see any signs of super strength, or would it be kind of a weak bounce and another leg down, that sort of thing? So far, it's been very encouraging, okay? And I emphasize so far, I'll get into that. Things futzed around for a little bit, but the last week and a half, the market's gone up nearly every day, which is obviously good. The broad market's been pretty strong. And last week, we had what we call the 3-day thrust, which is one of the Blastoff indicators we follow. Nothing's perfect, but these things tend to occur after declines, and they tend to highlight times that 6 to 12 months down the road, the market should be a lot higher. Okay, so that's my general view. Now, near term, it's more uncertain. Even with the 3-day thrust, the next 1 or 2 months, could we have a retest? Could we have more bottom building? Could we have, just some ups and downs and rotation and stuff like that? Okay, and that's really what we're looking for going forward. We did a little bit of buying in Cabot Growth Investors model portfolio on the 3-day thrust. Of course, we had a ton of cash, but we still have 75% cash, so we're still pretty defensive, pretty cautious. But what we see here with the primary evidence, it really hasn't flipped positive quite yet. But the intermediate term trend is kind of right on the fence here. Some stocks are starting to pop up, although there's not many new highs yet, very few new highs actually. But next week, there's a lot of stocks that are potential leaders. They're set up well. Some of them are testing or even maybe nosing to new highs here, close to it, but they're reporting earnings next week, okay? So I think the setup is there. The market has worked itself into a position where you have the big decline, the headline news, the panic selling. Then you have the rebound, you have the 3-day thrust, you have some resilient stocks that have held up throughout the decline. And now you have earnings season, the meat of earnings season, especially for growth stocks, kind of coming up. So the setup is there. Now we just need to see the bulls flex their muscles and really break these stocks out to new highs en masse. Not just 1 or 2 here and there, but 10, 20, one of those situations where you're missing some because you can't keep track of them all. Okay, that might not happen next week, but that's really the setup I'm looking for next week. If we see everything go perfectly, we could get pretty aggressive pretty quickly. But if the market sells off and the trend doesn't turn up, if individual stocks are mixed on earnings or really get hit hard, that will affect our outlook too. Right now, like I said, we're 75% cash, so actions speak louder than words. So we're still pretty cautious, but this is the weekend we really have our shopping list ready. We have our earnings list ready. And like I said, if things go right, we could kind of floor the accelerator next week, depending on what happens with earnings season and the market. Okay, that's enough of a preamble. Let's hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. We're starting here with the S&P 500. You can kind of see we had sort of this 2 legs down here, mini crash, tariff fears, and all that stuff. It's kind of hard to see on this chart, but just take my word for it. This day, and this day were 3 days in a row where the S&P rose more than 1.5% each day, which doesn't sound like it would be that crazy, that unusual to happen. But I forget, that's only the maybe 10th or 11th time I think it's happened since 1970. So it's like once every 5 or 6 years. And like I said in the intro, it portends, 6 to 12 months out. I think the worst scenario, like the worst signal, was the market's risen at least 11 or 12% sometime during the next year. On average, it's like 20-25% sometime in the next year. And usually the losses on average are pretty controlled. However, that's an average. When the signal comes below the 200-day line here, I don't get too in the weeds, but what the hell. When the signal comes below the 200-day line like this one did, about half the time you end up seeing some sort of, maybe it's not a full retest, but some sort of backing and filling for 2, 4, 8 weeks even, depending on the environment, okay? So it's sort of a longer term thing that tells me the lows are probably in, you never can be sure, but just playing the odds. The lows are probably in, and if we do back and fill, it should set up things for a bigger move down the road, okay? That's how I look at it. With that said, I'm not gonna ignore the primary evidence either. Right now, when our intermediate term model works where the indexes essentially have to be higher than they were 5 weeks ago. That's basically what it is. And when you look at the S&P 500, we're dropping off this area right here. Okay, so next week we'll be dropping off these days, so on and so forth. So we're basically right there, is what I'm trying to say. So if the market kind of does this next week, we'll have an intermediate term, uptrend, basically a new green light there. If the market, sells off, obviously, it'll still be a downtrend or at least not positive. we look at a few different indexes, not just the S&P 500, but they're all, or at least most, are in similar spots, okay? Certainly impressive snapback, okay? The NASDAQ, same sort of thing. We're dropping off this area right here. We're trying to see this 25-day line start to tick higher. So if we see that early next week, that would be, again, it's just a trend following measure. It's not like, oh, the 25-day ticked higher by 10 cents, full on margin or anything like that. But it's certainly basically telling you that the bounce that started off the April lows is sort of turned into more of a rally phase, okay? There's, of course, old overhead here, 200-day moving average. A long-term trend is not up, okay? So there's still work to do, but at the same time, there's no question that the bounce has been encouraging. Just running through the indexes, New York Composite, again, same sort of thing. We're trying to see if this 25-day line can turn up. And then you get the mid caps and small caps, which are lagging a little bit, but not that far. At least mid caps not that badly. Small caps continue to kind of bring up the rear here. This is the S&P 600 fund. Okay, but either way, on an intermediate term basis, I would just say next week is going to be very key. Okay, we still have. I mentioned before. Let me just go to the spiders. I don't talk about it a lot here, but the longer term trend, which we use 35-week moving averages. I'm not going to get into the details, but longer term moving averages, a lot of these indexes are still living below. We don't use that as a precise timing tool, but it is just something to be aware of. So if we did get a buy signal, we did see some breakouts, we'd put some money to work. But again, it's not like we're going to go from 75% cash to zero, although we could I'd probably be doing more buying than I normally would in terms of a first step or second step, okay? So that's the longer term things. I just want to mention a couple things and then dive into a bunch of charts. XLP, as you know, I like to look at every week. It's not falling apart or anything, but after this was that initial, it's a messy chart, so I can't get rid of all these lines. The initial thrust was on the tariff delay and all that sort of thing. But really since then, it hasn't done anything. So obviously when you go back to the market here, here was your initial, that was your tariff rally day. Pulled back for a few days, but now it's been up, 8 or 9 days in a row. XLP has been lagging, which is good to see. If the XLP was kind of up here leading the way, I'd feel a little bit less optimistic. But so far, so good on that. And then the interest rates are behaving for the most part. We are bobbing back and forth. I mean, it's getting to be a little bit of a, down, up. And there's obviously new, the jobs report this morning and all sorts of economic news, tariff data, or tariff rumors, I should say. But overall interest rates, I would just say, are behaving themselves well off the prior highs, okay? I will say, because I am going to get into a lot of stocks that I see that are set up that I think can work or are working. So I'm optimistic, like I said, the lows are in and we're going to be higher. I think the question is, if you're dealing in individual growth stocks, are you, buying something right ahead of earnings? I probably wouldn't because there's still some potholes. And sort of, if we are going to chop for another 6 weeks, you can get cut up pretty good. So the timing does count in some of these things. There are still blow-ups here in earnings season. This is Square. Now, Square hasn't looked great. It looked okay here, but it got hit pretty hard during the initial correction. And you can just see it's getting hit on earnings today. Atlassian team, this was like a former leading stock that's getting hit on earnings today. Even Eli Lilly, which I wouldn't say is completely broken, by the way. But this has like a nice long setup since last summer, a little bit of an undercut here. I've probably mentioned it on these videos. It's been in top 10 and it rallied back. And this is one of these names that reported earnings this week. And I said, hey, if this thing really gaps on earnings, it could be this nice long-term breakout. Obviously, the story and the sales and the growth and the earnings growth, but instead it gets hit. So let's just see what happens next week. I mean, to me, it's, if we have to wait 2 or 3 more days for kind of a go signal, it's not a big deal. But sometimes these things get right close to kind of a go signal and then don't really trigger, okay? So that's just kind of what we're looking at as we head into next week, okay? Now, with that said, there are a lot of names here that some of these have earnings soon. I'll mention them if they do. This is ZCAL, which does not. They don't report for another month or so. There's some old overhead back here, and you can see it's been a laggard in the cybersecurity space. But I always, when you're in a correction or trying to come out of a correction or bear, whatever you want to call this, mini crash, meltdown, I don't really care about the label. The action off the low counts more than sort of the stuff beforehand. If anything, the fact that the stock didn't have some huge run in the last 9 months probably is a good thing. And after wiping out below its lows, it's kind of been smoke up a chimney here and actually some pretty good volume. We haven't seen a ton of buying volume in a lot of stocks here in the last week or two, probably because they're heading into earnings. But either way, Zscaler, ZS, it's kind of a little bit of a turnaround. Growth is going to slow here for another couple quarters, then pick up. But certainly acts pretty well. The entire group looks pretty good, honestly. CrowdStrike, we've mentioned this before, but it broke out of this. We'll tell the whole story if people aren't familiar. It was a leader here during the November 23 to middle of 24 market run. It fell apart when they had that huge upgrade snafu. It came all the way back and looked pretty good here right near the market top. Of course, it got dragged down by the market, but you can see it held pretty firm. Certainly got hit, but not crazy abnormal. And now it's recovered almost back to its highs. Again, this doesn't have earnings for about a month. So we'll see how CrowdStrike acts. And I've mentioned Rubrik before. Again, this one doesn't have earnings for a while. My only thing here is it's very, wide and loose. I mean, if you look at the weekly chart, it's just, many weeks where the stock is moving 15 or 20% from high to low. But a lot of times that can happen, and then these things can kind of come under control. So we'll see. Again, it's back to within 10% of its high, which is pretty damn good given the overall environment. So the cybersecurity group looks pretty good. Two names next week they're not the same group, but they're similar. So DoorDash has had a big run, and frankly, I thought it would get hit more, but it's really just etched this double bottom base, supported the 200-day line, which is much better than the market's still below the 200-day line. DoorDash never got below it in the first place. And it's actually kind of moving above a little bit of resistance here with, toying with the 200 round number resistance. They have earnings on May 7th next week, so we'll see how that goes. And then Uber, which I really love. Uber, it looks good. It looks right. They have earnings on May 7th. It just has this big, kind of like CrowdStrike. It was the initial leader, really, really looked like a powerful leader. I had very high hopes for it. We owned it, made money on it, but I thought it could go a lot higher. But then it was the autonomous driving stuff. I'm not going to get too far into it, the robo-taxi and stuff. And really, it's just spent the last year doing nothing, okay? More than a year. But, after kind of, boom, 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 it seems to have changed character after the low. And again, kind of like Zscaler, I'm putting more emphasis on like, hey, how have you been acting after the market low? Don't get me wrong, if you fell 80%, that's a little bit different. But Uber was within a long basing structure, and you can just see it's really just been almost straight up since then. Some volatility, but moving out to multi-month highs today ahead of earnings. So it's definitely on my watch list. Lifetime Group, this is, I'm going to call them country clubs. They're not really fitness, they're fitness centers, but it's really more of a country club. Just kind of a nice consolidation. You can see it keeps getting hit a little bit on the weekly and daily chart, but every time it gets hit, it finds support. We call those tails on the weekly or daily chart. But you can see it kind of gets hit, but every time it does, buyers are there. It's not the most liquid thing, so that's probably part of it. But they have earnings on May 8th. So, again, I'm not saying every single stock, if it gaps up, just go buy it. But, just obviously gap ups would be good as a general statement here, which is kind of what I'm looking for. Insulet, I have to be honest, I said I put more emphasis on things after the low. Insulet hasn't bounced as much since the market low, which was right here, which is I wouldn't say yellow flag, but it's a mark against it, okay? That said, the overall the overall pattern is resilient. They have earnings on May 8th. And if you just look at the, kind of the bigger picture chart, big decline, it's worked its way back, and just kind of a nice, reasonable consolidation. If you come in next week sometime and it's gapping up like that, it would certainly look pretty good. There's a lot of names in the medical space that have earnings next week. Some of the earnings that have been reported this week are in the aerospace sector, look very good. Howmet, HWM. I would say these things obviously have had big runs, so there's a greater chance that these things could move, but there's some pent-up selling there that maybe hasn't been totally released here during the correction. But you can't, again, that's something to keep in mind, but you can't argue with the move here, especially relative to the market here, gapping up to new highs on earnings. GE Aerospace, we've mentioned a million times. It is in the meat of this resistance here, and this is not the fastest horse. It's not going to go and double in the next 2 months or whatever. But I do think in terms of sort of a steady liquid leader-ish, it spent about a year doing nothing, and it had this over-the-top volume at the lows. It had the buying on earnings, and now it's a couple percent from new highs, so that certainly looks good. Carpenter Technology, CRS, same sort of thing. It's a little bit more of a materials supplier, but same sort of thing, aerospace-based, and is acting very, very well. Just because I get questions on it, I do want to mention, so in the big, the mega cap space, there's no question Netflix looks the best. It's been smoke up a chimney here, up every day like the market since earnings, which are already out of the way, so that's good. My guess is, just being a liquid name, and by the way, with good earnings estimates. I mean, it's got good, the next few quarters at least are going to be pretty good here on the number side. The first pullback here should, quote unquote, be fine. If it's not, even if you never buy it, if Netflix comes in next week and just melts down, I'm not going to say that means the market can't go up, but that would be kind of the way we look at it in terms of leading stocks. That would be a red flag for the market. But I would just guess that the first, pullback in something like this would be buyable. And then Microsoft, which is not my kind of stock. I'm just saying it's not my bailiwick, but overall you kind of have this, correction in the summer, and then this, just looks really bad. And then boom, like everyone's kind of out of it. They report earnings. Again, you have this huge volume support at the lows. And then this week you had a good sized gap, and it's back to within, there's definitely resistance up here, but it's certainly back in the game, so to speak. So if you're looking at sort of the mega cap names, those are a couple to look at. And just a few more charts. I mean, there's a lot of things out there. This is Bitcoin. I use IBIT, but you could use GBTC, but IBIT, a very normal correction. And if you look at this, which I tweeted about a few weeks ago, a lot of tight weekly closes at the lows near the 200-day line. That's usually a sign of accumulation. We'll see how it plays out. It's Bitcoin. It can go wild up or down, but so far it's certainly it's behaving like a normal. If you didn't know what this was, you'd say, wow, this thing looks really, really under control. And now it's starting to pick up on the upside. So that does intrigue me. C Limited, of course, tariffs, international stuff. It's there's a lot of headlines, but again, just putting the emphasis on where we came from the lows here, it certainly has just completely changed character, and it's all the way back to its highs. So SE looks pretty good. They do have earnings on May 13th. Okay. Amphenol, APH, this was in top 10, reported earnings. They're kind of a little bit of a roll-up play, but also they do have some exposure to some of the technology infrastructure sort of thing on a basic level. But you can just see this, not to get too in the weeds. Again, I keep saying that in this video and then I do it, but big volume at the lows. And then I think this was either all time or many, many years, the highest weekly volume that the stocks had, and it gapped up on earnings. And certainly it's been following through this week, which is just what you want to see. Roblox reported earnings this week, certainly powerful. I mean, again, corrected pretty sharply, but held the 200-day line much better than most stocks. And since that low, since the low, that's what you're looking for. Very, very strong. It's not like it's been doing this and then kind of doing that, that sort of thing. Very, very strong on the upside, both yesterday on earnings and today. And then I'll just mention this. This is, we've tried this a couple times and I can't hold on to it because the stock, this is Duolingo, DUOL. But I mean, you just get these, 35, 40% declines. And one of these times that 35, 40% decline is going to turn into a 65% decline. I guarantee it. But the stock held its 200-day line and really changed character I guess it was a week and a half ago with the market. You're going to see it's just been kind of grinding higher, gapping up big on earnings today. Even if I wanted to dive into it, I'd probably, my guess is you'll see some pullbacks here. But the more stocks like that we see, especially on the growth side of things, it's not like, Monster Beverage, which is fine. It looks fine. We've had it in top 10 but it's, it's defensive sort of thing. The more of these growth stocks you see that gap up, the better. And there's just a bunch next week in the medical field and some of the ones I mentioned today. Okay. Back to the overall market. I mean, I would just say, actions speak louder than words. We have a lot of cash. So if the market pulled in next week, I wouldn't be like crazy unhappy. I'd be like, okay, we just need some more time. But we're definitely going to be ready because this does have it. So far, I guess I would just say we've had a little mini retest here, and so far it's pretty much acted both on the index level, the broad market, and among some of these potential leading stocks. It's pretty much acted about as well as you could have hoped. I mean, I guess in theory you could have hoped we'd come back, gone back to new highs in 2 weeks or something like that, but realistically speaking, and the fact that we had a 3-day thrust, and I don't want to get into it, but there's a chance we get another even more, they're all reliable that I follow, but even more reliable Blastoff indicator to flash on Monday if things go well. So we'll see what happens there. But the more days that go by, the more pieces of evidence that are dropped, the more optimistic I am. Now it's really about seeing the core primary evidence, which is the trends of the major indexes. And of course, just as, if not more important, the action of leading and potential leading stocks, especially after earnings, to really kick into gear. If we see that next week, it could be go time. Okay, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.